What's up, folks? Heine's Morning Update. August 30th. We're kind of pegged in between here. Yesterday, the 42.75 level was pretty big. 36 is pretty big right now. We're kind of in a consolidation. It's interesting that the 4006 level was the 50-day moving average, and we're up here at 68 is your 100-day moving average. So we're kind of caught in between the two. So that's going to be my, we're going to diddle in the middle between them. We break below '06, and that's going to be bearish. We get above 68, we're going to be bullish. We get above there, and then we're going to start to look at I would say the 4100, but more likely the 4110 level here. And then the next stop would be that 27 to 30 area. And then your 4135 is your 60-day volume point of control. So we have a lot of traffic actually in this 40-50 range. From a macro, if we get a close, a monthly close, so after tomorrow, so tomorrow's close above this 4165, 4170 area, that might change the outlook of things. So the monthly close is going to be fairly important. If we get above that, then the bulls might take a run at it. But right now, again, it's below. We're kind of in the middle, and as I said before yesterday, and I've been warning, we're going to get swingy. There's no clean-cut direction. We're not really seeing full trend days other than Friday, right? So we saw that trend day, but a lot of these are just kind of a choppy mess where we're moving up and then we're reversing. So if you see profit, take profit, don't hang out. I know that we had some interesting, a tough day in the room yesterday. A lot of people got caught by that move. And to be honest, man, that move was wicked. That ramp up and then, collapse down. So be vigilant and it's kind of a choppy mess as it finds direction. Next month is going to be different. There's going to be a structure change. I just don't know what it is or how it's going to look. But anyway, so that's kind of what I'm looking at upside. I think that, this level and, on the high side, the 4150 will hold if we get up there. But 10, that 28, 30, 35, I would assume that this level would be defended by the bears. 47.50 would be very extreme high end. Below 4006, I've got an 80.81, and then I have all that traffic down at the 49.57 level, or 49.53, excuse me. So this area in here is going to be very interesting. Because you have so many opens and closes, if you see right in here. So I would assume that this, 3960 area, 3950 will be defended. And if not, then we'll come down and we'll see that 3900. Now, if we get a monthly close below 3900 while we're still on the macro, that would be very bearish. So we're kind of, it's like 160 point range there. In between is going to be neutral, bearish, but we're looking at closes tomorrow. So today I don't know. We've got a couple economic indicators coming out. We'll hit that in a second. Euro's being defended above parity, so we're at one, just above it, just above one. Here's your daily SPX. You still have a cash gap up here at 28 and 42, 4200, 4228, and then we have a cash gap down here at 3951. So that would coincide, as we hit here where it stopped, we could see a stop here where that 3953 or that 5153 area, because they've been doing that and stopping before the cash gap. It's like screwing with people's heads. But again, that would have to get all the way down there. I could see a consolidation day and then a move for end of month. Today, I don't know. Relvol's at 119, so not light at all. But again, it's swingy, it's a tough trade right now. Here's your economic. So today we have 8 a.m. Oh, 10 minutes. Richmond Barkin speaks. Who the fuck that guy is? Home price index year over year is probably going to be interesting and important. Consumer confidence, job opening quits, and then at 11 a.m. you've got John Williams. So they're still cranking out the Fed speakers. Tomorrow you've got Fed speakers, ADP employment, Chicago manufacturing PMI. So Thursday is going to be a big one too with jobs, and then Friday is your non-farm payrolls. So yesterday was kind of our break, and then now we're going to start to get into some economic moves that can move the market, but I don't know right now. This doesn't make much sense to me. I'm kind of sticking my hands in my pockets. Again, no trade is a trade. Cash is a trade. If you don't see it, don't trade it. Don't force it. And again, just be vigilant because we're whipping around and there's no rhyme or reason. It just seems kind of like, almost agenda-driven algos in my mind. So be careful. And I'll be here for a little bit, but I'm going to be in and out all week due to work. Anyway, have a safe day.